I think that they deserve more. I'll tell you why. I was going over what they said on March 26th when they gave you first quarter and full year guidance. They said monthly actives would be 168 to 170. They came in at 170 million. They said premium subs would be 73 to 76. They came in at 75. That's in line. Total revs 1.1 billion to 1.5 billion. They came in at 1.4. Gross margins 23-24. They came in at 24.9. Operational loss guided for 50 to 80 million. They came in at 41 million loss. They have 90 million free subs. 60% of a free sub takes paid. This is a buy.
It is.
It's a buy.
And gross margins, I think 24.9%.
What's the matter with that?
Q1 up from 24.5% from the fourth quarter, and obviously 11.7%. They're going in the right direction.
This is a company that is the opposite of the planet, the guy who does the planet before Pluto. This was transparent. This was a reasonable statement that they gave you on March 26th. It's almost as people forgot. Of course, they were looking at the quarter when they spoke on March 26th. They did exactly a little bit better than what they told you, and the people are selling the stock with 90 million free subs. Think about it. Apple does not have that model. They have 90 million free subs and 60% convert. Think about where they'll be 3 to 6 months from now. I think this was a very, very good call, and that the analysts are too negative.
So you're in the school that we just celebrated Apple services revenue.
Yes.
Part of that's music. Amazon has talked about the numbers exceeding certain levels. Right. But you think a rising tide still lifts?
I think free is the gauge here, not unlike what we saw with when Twitter broke out. The opposite of what when Snap collapsed. And this is where you put, I think this company is such a good company. I think the CFO is really smart. Yeah, I think that they just chose not to play the game. Now, Musk chose not to play the game by blowing everything up. These guys chose not to play the game by just saying, listen, here's the numbers.
Right. The stock, to be fair, had moved up substantially into this print. In the high 160s.
I just think it's a buy.
After sort of moving around a lot on the days following listing. So,
look, you can say what you want about this company, but the euro loss, the 50 to 80 down to 41, is terrific. 2018 guidance is the same. I think people who didn't study the March 26 call really missed out. But the key thing here, you have to understand that this is going to be gauged by how many free. Because that is the true indicator of what's going to happen in the future. 90 million free? I don't know about you guys, but I didn't like free. I switched to paid. Everybody I know switched to paid. I know that's just anecdotal, but the numbers bear out that a free person, 60% of those people go paid. So buy the stock down here. I think that the stock is reflecting uninformed sellers who don't understand how much was laid out before this conference call. It's a good call.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.